It has been unloved and how. I'm speaking about state-owned reinsurance company GIC Re. Before we speak about the company and its financials in greater details, let's just see what the stock has done. GIC Re stock is up over 50% in the last 1 month, but despite this rally, it's still 50% off its IPO price. Let's first speak about what led to this 50% rally in about a month's time. So, 3 important reasons. There has been a strong turnaround in the third quarter of FY21, the quarter which just went by. Second, there has been a larger rally in the PSU basket and GIC Re simply sailed into that rally. The third one, limited supply as far as public shareholding is concerned, that also accelerated the rally. To speak about the third point in greater details, if you look at the shareholding pattern of GIC Re and if you remove government and LIC, then the public has just about 5.5% float. So hopes of larger supply coming into the public float also accelerated the stock price. As far as the business at GIC Re is concerned, it's an insurer to insurance companies. It shares risks with life and general insurance companies in exchange of premium sharing. And as far as the company's fundamentals are concerned, it's the sole PSU reinsurer company with a market share of over 70%. To its advantage, it gets mandatory 5% premium on every general insurance policy sold. Also, it enjoys the first right on every insurance contract which is sold in the country. Now, let's speak about the financials, and to start with the combined ratio, the most important ratio for GIC Re. Combined ratio is essentially the ratio of all losses, expenses, claims to the premium earned by the company. As far as it goes, lower the combined ratio, better it is for the company. If you look at GIC's performance, it has been improving over the years and quarters, but especially in quarter 3, it showed a very strong number coming in at 108 versus 122 in the previous quarter. Also significant improvement on a year-on-year basis. Let's look at another parameter, which is the operating profit. After posting operating profit in the first 2 financial years after listing, it slipped into loss in FY20. The performance in FY21 has been patchy until the third quarter, where it showed a very strong number, operating profit of 1030 crore versus loss of 1100 crore. Let's look at one more parameter, and that is the underwriting performance. Similar story, patchy performance over the years until the third quarter, where the underwriting profit, underwriting loss reduced all the way to 1035 crore versus 2800 crore on a year-on-year basis. Now, as far as the results are concerned, it has been a reason and it has been a consequence of a lot of structural changes. The company is opting out of many loss-making businesses. There is a tighter loss-sharing clause in the agriculture segment, which is aiding that particular portfolio. Also, there have been lower claims in the agriculture segment because of better rains, and finally, significant unlocking seen in 2 major segments, that is motor as well as health. It's because of these structural changes that you see the improving performance in the 4 key segments for GIC Re. Fire, motor, agriculture, everywhere the underwriting loss has significantly gone down. Fire, it's almost out. And as far as the best one is concerned, the health portfolio, where in the third quarter it posted underwriting profit of 24 crore versus a loss of 72 crore. As far as share prices are concerned, they are always a combination of valuation as well as fundamentals, and hence a look at valuations. Since there is no domestic player to compare the valuations with, we've compared it with some major foreign players, and GIC Re here also trades at a fraction of valuation as compared to all these foreign players. This is the sum and substance of this unloved story so far for GIC Re, an interesting story in the making, with the disclaimer that it's not a stock recommendation.